presentation contains current opinions of Moez Ansari, Chief Investment Officer of Compac Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone and welcome to the Compac Market Wrap YouTube update for June the 23rd, 2025. Thank you for joining me today. I'm Mo Ansari, President of Compac Asset Management, and I'm going to talk about the markets. What happened past week, what happened over the weekend, what happened today, and technically, where do they look as far as the markets are concerned. First of all, a quick reminder, don't forget to subscribe to this channel. Just click on the subscribe button. So whenever I post an update, you will be notified and you can watch it at your convenience. Looking at the markets last week, sort of quiet. They were on pause. They were waiting to see what happens with the war, what we are going to do, how Iran is going to respond. That was all of the news, and the market said, let's slow down. The S&P was down 0.12%. The Dow was up slightly, and we saw the Nasdaq also up slightly, just about flat for the week. So nothing dramatic last week as far as the market. But over the weekend, a lot of anxiety in the market. We saw us go ahead and bomb the Iranian nuclear sites, and then we took them out basically, and then we saw everybody was waiting. Okay, what does happen now? The media was blowing it up. Oh my God, they're going to close the Gulf of Hormuz, which will going to stop 20% of the world oil, even though United States would not be impacted, but world oil prices would go up quite a bit, and that could be inflationary, could impact us in the long term. So everybody was very concerned. And then there was concern about the U.S. bases throughout the Middle East, in Qatar and Bahrain, in the UAE, in Iraq, in Saudi Arabia, all of those. We have about 40,000 troops stationed right around Iran. So that was the worry that if Iran decides to strike some of those and we have casualties, then the U.S. would respond. But this morning, we heard that Iran did respond. They fired 6 missiles and seemed like we knew about where the missiles are coming from, shot them all down, no damage, nothing. And that just sort of took all the war anxiety down. Now, again, there's still a war in the Middle East, still a lot of anxiety there, but it took, I think, the immediate anxiety down a lot, and it seems like we're headed towards de-escalation. Seems like Iran is looking for an off-ramp somewhere, how to get out of the situation that they have got themselves into. So with that, oil dropped nearly 7.5% from the high this morning. So we'll see. Energy last week was the biggest gainer, and we saw healthcare the worst sector for the week. Oil, which was up to $75, now it's down to 68 or so dollars today. So it's come with 69 and changes where we're looking at. So it's come way down. And again, remember, oil was $78 a barrel or 72.5 at the beginning of this year. And now when Trump took over, it was $78 a barrel. Here we are at $69 a barrel. So that was the biggest worry for the market, that with all this war going on in the Middle East, it could push up prices, which could push up inflation, which could push up interest rates, which could have a negative impact on the U.S. economy. So far, none of that has happened, and the market is sort of taking in stride. Now, the two things, the war, geopolitics, and the second thing is the big, beautiful tax bill, or the tax bill. Now, that is going through the Senate. The president wants it passed. I think that is where the focus is going to shift now, if we do see a de-escalation in the war in the Middle East. And then we'll have to wait and see how that bill, what changes the Senate makes. Will they be able to pass that and then send it to the House? Has got to vote it again and then get it to the president. The objective was to get it to the president's desk by the July 4th holiday. If they do, I think the market is pretty much okay with the bill that was passed by the House. Small changes. I think the market was okay with that. Market was worried that would be a lot of deficit spending. The deficit would go up a lot. It's expected to go about $2.5 trillion over the next 10 years. But I think the market says we can take that and absorb that. The other thing was that, okay, we're going to have too much spending, that'll be inflationary. Well, that's not happening. So I think those two things, if we get de-escalation and we get the big bill passed, the tax bill passed, that could be, I think, positive for the market. Plus, there were comments by the Federal Reserve, one of the Federal Reserve governors, that said, that they might bring rates down in July. Waller said that. He's the governor of the Federal Reserve, and rates are down today, which is positive again. But again, as long as you stay between 4 and 4.5% to 5%, somewhere in there, I think market can live with that. It's not too hot, it's not too cold. If interest rates go above 5%, that would be negative for the market, because then the bond market is looking for inflation. If the interest rates go below 3%, that means the economy is slowing, and the Fed has got to bring rates down to get the economy going again, and that would show that a recession is coming. So as long as we're around 4%, market can live with that. Tariffs, again, everybody said it's going to cause prices to go up. Over the weekend, I was talking to some importers that import stuff. I was talking to some of the people that are exporters. And then I was talking to some of the people, and we saw retail sales. So what we are seeing right now is that a lot of people are absorbing these tariffs, not just the retail. Everybody said prices will go up, there'll be no cars, and so on. I think the people who sell the cars are raising less prices. The people who bring in the cars are taking some of that. So all of this is happening, and it's being distributed, the price increases over a period of time. So we'll have to wait and see how that plays out. Retail sales were down this week. Housing starts fell last month, and today we saw existing home sales go up. There's more homes coming to the market, existing homes. So that, I think, will keep shelter prices down, and that could bring inflation down. Fed held interest rates steady last week. No cut in quantitative tightening. So I think overall, we're seeing everything sort of status quo. We saw, as I mentioned earlier, existing home sales were actually higher. They went up. Expectation was they'd be around 3.95 million. We saw 4.03. So we're starting to see that, and now we get the first quarter GDP final report. Not a lot of stuff coming out, economic stuff. Last week we saw Friday market come and test the 20-day moving average around 59.50, 59.54. Today we came very close to it, but closed sharply higher once we saw the response from the Iranians. Looks like this is just a very slight pullback here. I think fourth waves are choppy. We could see some more escalation. Next support is around 57.50, but overall I think we are going to head higher. Long-term target comes somewhere around 63.50 to 64.50. That's the target from this third wave. Fifth wave high should be somewhere around here. We'll have to wait and see. Same thing on the weekly charts, projecting to 63.50 to 64.50 as a fifth wave top. This was wave 3, wave 4 to the downside. Now we'll see wave 5. Again, this is a weekly chart going back to 2021 all the way back here. This is 2021, 22. This is 23, this is 24, and this is 2025. So this is nearly a 4-year chart that we're seeing. So it's a long-term chart. It takes years to get from 3 years to get from here to here. So it could take another year and a half to get here, but it could be faster to get up here. So we'll have to wait and see. Same picture in the Nasdaq, came to the 20-day moving average, held it, bounced off of it. Nasdaq long-term target is coming in around 21,000, 21,500, but we're already at 19,600 today. So that's about 1,500 points higher. That's 7% higher than where we are, which is no big deal. That seems to be the fifth wave target on the upside is right here. So, but it could take some time to get there. Interest rates still stuck in this range, around 4.5% to 4%, just going up and down, staying steady right there. Interest rates between 4 and 4.5 are perfect for the market. Gold down a little bit, or today was up $10, but not a lot. I was expecting a lot of buying in gold as safety, but when we saw the Iranian response, which was nothing, with that gold sort of is finding, I think it's going to sort of go sideways to slightly higher. Oil prices, which are up big, came back down right after the close in oil. So I think we're still around $68, $69 a barrel. Those are my thoughts. Again, I think we'll wait to see how what happens with the war and what happens with the tax bill. But for right now, It's just stay calm. There's a lot of news being thrown at us and a lot of excitement on the headlines. Missiles been firing, this happening. Taking the emotions out is the hard part, and that's what we have to do. Don't forget to subscribe. Click on the subscribe button so you get this update whenever I post an update. Those are my thoughts. Those are my observations for the last week and what I'm looking for. Again, if you need help with your portfolio, if you want somebody to take a look at it, it's free. Send us an email at invest@compact.com or just call us at 800-388-9700. 800-388-9700. I'm Mo Ansari. Thank you for tuning in. I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compact Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.